The following is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien, all you tigers and tigresses. We appreciate you growling and prowling out here with us. Right now, we get the Dow down 28, Nasdaq's off 4, S&Ps are off 2. We get gold down $4, trading at $1,671 an ounce. Copper is down a penny at $3.45 a pound. You get light sweet crude flat at 95.66. Bonds are up 8 ticks. At 149.05, and King Dollar's down 32.
Yeah.
You know, there's good divergence there.
Yin and yang.
Yin and yang, big time, man. I mean, there's no two ways about it. The DAX, folks, is off 45, and the FTSE, which was closed yesterday, is down 13. But I want to get over to this dollar first because, you know, the divergence there is pretty intense, there's no doubt. And, you know, the dollar's down 32 ticks, 7,000 contracts. That's not even close. You need a lot more contracts than that. But that's divergence.
Well, kind of, yeah. It's so much divergence because you got bonds. I think bonds were, you know, not showing that they were backing off.
No, they're not.
Okay,
they're not.
You got
that's bonds. They want to go higher, man.
Yeah, the commodities were not doing much now with the pullback. So with the pullback in U.S. dollar index and the move higher in the euro, the commodities, and I'm really talking about, you know, oil, gold, silver.
Oh,
at this stage.
They're all getting whacked. I mean, you know, if we pull all the commodities up, and, you know, the bottom line is that you have cocoa up 1.7% and sugar up 1.4%. Other than that, nothing. There's zero.
Yeah.
You know? So
with the, you know, it's a pretty decent move in the euro this morning. So somebody's not believing something.
Well, you know, the amazing part, you know, there's a lot of different parts of, you know, whether we're looking at the market, we're looking at the whole world. And when I look back, so think about something, right? This is pretty wild. You know, if we go back 5 or 10 years, the euro was supposed to take over the world, right?
Yes.
What other currency was supposed to take over the world? The yuan.
Oh,
right?
Well, no, okay. So I never for a second even that. You
you spent a lot of time over there, okay? But you know, if you hear the mantra inside the United States, you had plenty of financial people pounding the deal on a continual basis. The yuan's going to take over.
Yeah.
It's like not even close, folks. No. The yuan out here this morning, folks, okay? You know, the dollar is going to toast and roast the yuan. The dollar is going to use the yuan for marshmallows, man.
When I go to a black market area in the United States and people are looking for euros or the yuan, then maybe I'll start buying into it. But I've traveled around the world too much to be in too many black market areas where people they want the dollar.
Yeah.
I don't care where you go.
Right. No, it's wild. I mean,
now, at first, when I had no knowledge really about it, many years ago, when I first started traveling overseas, you know, I'd make sure that I went to the bank, you know, had local currency, you know, and deal with that whole exchange rate thing. And I quickly found out, you know, after a couple trips, I didn't need to do that. Not that it wasn't easier, you know, when you're going through restaurants or things like that, okay, but to just simply have a stack of, you know, U.S. dollars, whether it's ones, fives. I mean, you know, it was greatly accepted everywhere.
I know. It's intense.
It was better than an American Express card.
Yeah. That totally makes sense.
That is not the case. You try coming over to the United States with euros and go to the store downstairs. Right. What's this?
It's not going to happen.
Right.
Yeah, it's not going to happen.
And yuan, they're going to be like, I don't want monopoly money.
Yeah, I know. You know. So, you know, it's gonna be wild watching this whole thing shake out because one by one, folks, what it seems to be happening, one by one, they're all falling.
Yeah.
You know what I mean? It was the dollar that was supposed to fall. It was supposed to be the end of the world. You know, no, think about it. I never bought that anyway. You know, the dollar did, folks. The dollar went from 120 down to 70.
I mean, it was all engineered. I mean, it was I guess I'll come from the larger perspective when you go into the March crash. You know that the first engineering this is my personal philosophy. The first, because when I listen to guys like Greenspan talk, Bernanke, it's all psychological.
Well, remember Jon Snow? Jon Snow, folks, was the ultimate, right? Whatever he said, okay, I believe in a strong dollar. Well, Jon Snow believed in a strong dollar. We went from 120 down to basically 90 before he was out of office. That was the mantra.
The strong, because he didn't mean strong.
Well,
he meant weak strong.
He just went to a different school, so it had a different definition of what strong is.
Yeah, but and I'll do it at some point in time. I know I got charts out here, maybe some of my other systems, but look, what I always thought was one of the coolest things, during some of our conversations, were how you always thought of your thinking process was in terms of gold.
Right.
You'd be out.
Yes.
You'd be out with Angie.
Yeah,
she'd say, "Take a look at this," and you would say, "Wait a minute, that's 5 ounces of gold."
No, totally, okay. Exactly.
And it actually was kind of from that I started to take a look at some charts and going back to the first QE time period.
Right. Oh, yes.
Right. And what can I buy the S&P at? What can I buy the Dow or Apple, any stock or what have you? And that's where you got the ability to see that it was just the shell game. Truly the shell game.
Yeah, exactly.
And because
it's really the shell game. It really is. No, do you still get that report?
I still, I got the report. Yeah, and then I'll go back and I'll actually grab the chart, or I'll create the charts tomorrow or something like that,
because that's
so
neat.
We can take a look at
neat. It's neat.
And take a look. And what was interesting is actually when you then also apply that to similar commodities, also priced dollars, like oil or what have you, it was relatively flat.
Right. No, exactly. No doubt. That's where that whole
So psychologically, you had to get prices up there. Well, you didn't have to, but that was the engineering part of
no doubt.
What was going on. Doubt. And so now, for me, a little bit of the disconnect is, because they're dealing with kind of a similar situation over in Europe, and so they want to go ahead and print more money.
Right.
Okay.
And how are they going to do it?
And how do you do that and not have the U.S. fall apart? How do you because if you because if they print and we don't print, King gets even more kinger.
Oh, big time. When we talk about something strong, let's go to the strong woman over here, Ilka. She's going to give us a beating this morning.
Oh, is she?
Ilka, what's going on?
Hi, two bears. How are you guys? Oh, wow. I'm the one who's buying euro.
He's Papa Bear.
You know what? Listen, folks, you got to love this. Look at it. I'm looking at the the IM that's coming across. I'm saying to myself, you know what? Look at it. She's going to go buy the euro.
And I'll have another bet with you.
Oh, you will? What are you going to do with the euro?
Double or nothing. This is
double or nothing.
4 lobsters, or I'm buying you double pizza. I'm going to say that the euro will hit 127 before it hits 124.65.
Well, okay, I'll take it.
Will you go for that one?
I'll take it. See, what's going on here, folks, she's taking advantage of us, but that's all right. Because
Why?
the 127...
Wait.
127.48. Listen to that. 127.48 is a swing point. I'm only kidding with you, Ilka. I'll take that in a second. You are taking advantage of us, but that's all right.
Okay, well, listen. I like lobster. You like pizza.
Listen, no. Hey, we'll take that. We'll take that.
You'll take it? Okay. And then, so when are you coming to Boston? Because we can put like 2 weeks into it.
No, let's put 2 weeks into it. In fact, I'm coming. And in fact, if any of you folks are interested in the real estate business in Florida, I'm coming up there. What day's today? Today's Thursday?
Tuesday.
I'm coming up there 2 weeks from Thursday and doing a presentation for the Tiger Fund. So I'll be up there.
Middle of September.
And I can collect my bet that day.
Very good. Sounds like a plan. And I'm buying a little bit more today of the market. So remember, I'm a trader. I'm not an investor. So we'll see how it goes.
We certainly will.
How's your son doing?
I think we're going to get you your own program here.
He's doing well. He's home today. So
good.
The surgery went well. I mean, we had some complications, but he's doing fine today.
Oh, that's
awesome.
That's
okay,
great.
Very good.
Hold it. We got to go over this again. I want to get this thing straight again. We got to get this on tape. Okay, so
yeah, and make sure you write it on the board or something.
I'm going to write down right now. 1 second. Let me get a pen here. Okay, so tell me what it is again.
I'm saying that 127 will be hit before, and I don't think actually 124.65 will be hit for a little while.
Okay, so the 127. You're going for that swing. She's going for the swing point, folks, from the. Yeah.
No, I'm doing. whatever I'm going for, it doesn't matter.
Oh, it really doesn't, huh? Oh, really?
Because I actually
she's getting
think,
cocky out here. Look at this.
I actually think that euro might have hold on one second.
What are you eating for breakfast in the morning?
I actually don't eat breakfast.
Oh.
So 120.42, I think it's the low. So I think we're going higher. So anyways, yeah, maybe euro will take over the world.
Okay, hold it. So 127. So what's on my side? So that's your side.
So we're saying.
And what's my side, though?
Well, your side is that you're going lower.
But you gave me a number.
124.50, I think.
124.65.
124.65. Okay, we got it. Okay, sounds good.
Look, do you have a direct line to Mario? Is that the?
No. No.
You know what?
No, it's pure Chapman wave and Elliott wave together. That's all I'm doing.
Yeah. Okay.
Ride those waves,
mathematical
baby.
calculations.
Ride those waves.
Very good.
Okay.
All right, you guys.
Great talking to you.
Thank you. Nice chatting with you. Bye-bye.
Okay, bye-bye.
And so Super Mario.
Super Mario. So picture this, folks. You got to love it. Everyone's waiting for, Jackson Hole.
Yes.
Well, Super Mario's not coming.
I know.
He's too busy.
Yeah.
The euro is collapsing, folks.
They sent him out to buy euros this morning about 3:30.
Yeah, they did.
That's why I think that Ilka's got a direct line to Super Mario.
I bet she does. She definitely
does. Ben said, "Hey, you can't come. You didn't hold up your end of the deal.
Yeah.
I'm buying the S&P. You're supposed to be buying the euro.
Yeah.
You're letting this thing pull back too much."
No, listen, man. The amazing part. So, folks, we're not kidding. Draghi is absolutely. First picture. What this Jackson Hole is all about is that once a year, well, more than once a year, but this is all the central bank that's getting together trying to figure out, okay, what's going on. Well, the biggest crisis there is right now, anyway, is in Europe, and he's not coming.
Yeah.
Oh man, I don't know. We'll see where it shakes out, but that says quite a bit.
Yeah, it does.
Yeah,
it absolutely does.
Yeah,
yeah. They're trying to cover tracks and try to come up with all different kinds of reasons why. Oh, it doesn't want to take away any steam from Bernanke or this or that, but give me a break.
Well, it's just going to show that the politicians and the bureaucrats, we don't need any of them. Get rid of them all.
I like that.
Get rid of them all of them. I've had it. All of them. Folks, if you want to see your tax money at work, let me tell you something. Last night, we talked about this a little yesterday, but last night, one of the most disgusting things I saw in Tampa, okay, see a picture. We got the Republican convention here, but you get a picture of something. The local TV stations, right?
Yes.
All they talked about, right, was that how many protesters were going to be here? Folks, there's about 15 people here, okay? I'm exaggerating, okay? So there's 200, okay?
Right. Still.
There's 200.
That's right.
There was 8,000 cops that we're all paying for,
yes.
Hand over fist, right? Looking like they're freaking Gestapo.
Oh, I tell you,
They look like they're playing football. They get knee pads on now.
Absolutely.
Knee pads, shin pads. I mean, we better call Hughes and Callahan, man.
Yeah,
I mean,
okay.
they think they're playing hockey out here, man. Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses, you stay right there. We're coming right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here. Whereas right now you got the Dow up 7, NASDAQ is up 5, we got the S&P's up 2, and U.S. home prices.
Now that's something that's up.
Big time. Schiller, folks. Now, this just came out this morning. So home prices in 20 U.S. cities climbed in June from a year earlier. That's the first gain in almost 2 years. Now, inside this, folks, what you want to wrap your head around is this. So when you hear this number, it's going to blow your mind, but I know what this number is all about. Okay, so let's go back. I want to go back to the housing crisis, the debacle after it, and where we are now.
Yes.
So picture something. The biggest foreclosures, folks, okay, were in Nevada and Arizona.
Yes.
Okay. Florida came right after them in California.
Yes.
Okay.
Yes.
Well, guess what? What you have is that now what you have is that Arizona and Las Vegas aren't even
on the
close to the top anymore.
Okay.
And this is why. What has happened is this. Both of those states where everything went down the tubes,
yes,
they are basically large developments, sub-developments,
Yes, right.
And what it is that there are all houses that large funds can model.
Yeah.
And when I mean model, let's say you get a beautiful sub-development, a development, you get 12 different models, you know what you're going to get for rent, you know what you're going to get. So huge money went in there, bought them, rented them, are selling them, and stabilize the deal. Now check this out. This is pretty amazing. Phoenix, folks, is up 15% in 1 year.
Yeah, Phoenix has got a lot of, Phoenix has got a lot of action behind it.
Huge.
Growth.
Huge. Growth. It's there because once the deck is cleared, folks, and when I say the deck is cleared, they were in there, and they're still basically in there buying houses. Probably now it's probably 70 cents on the dollar versus it was 50 cents on the dollar.
Yeah.
So...
And Tampa's another area where we've got a lot of growth.
Tampa right now, it looks like Tampa was up 6% in the last year. And if you do have an interest in real estate, we're doing business in Tampa, St. Pete, and Clearwater. Bottom line, which is really neat down here, is that you can't model. A large fund can't model. I mean, they're in here, and they're going to be in here more, but they can't model it because
there weren't those cookie cutter subdivisions that were
exactly. It's a dense, like Pinellas County, folks, is 3,400 per mile.
Yeah.
It's the densest county in Florida. And if you want to understand exactly what the Tiger Opportunity Fund's all about, just come over to our website at TFNN. You're going to see a banner right there. You can check it out, and you'll see exactly how it's shaken out. I am doing a presentation this Thursday night online at 6:30, and then I got another one in Boston. But this is, you know what this is like? You know what's interesting about this is that when I first started the Gold Report, gold was at 2.
You could get people to buy it, right?
Well, no, yeah, you could. But people...
Not a lot of believers.
No. Most of the believers came in at 700 or 800 versus 300.
Yes.
Because gold bottomed at 282.50. We got involved heavily at 303.04. I bought it at 282.50 right on the air, but the reality is that 304,
yes,
that was it. By 700, people really got interested. By 1200, unfortunately, the whole world was interested. And by 1900, the people that never bought gold were buying gold, and they're going to be stuck with it for a while.
Yeah.
But in this case, the real estate deal is totally different because what you do have is that you're buying at 50 cents on the dollar. You're buying something that can go cash flow positive. You're buying something, if you want to flip some of them, you can flip them and do 30% in about a heartbeat. So.
Yeah, and it's a psychological thing. I was on
it is.
I was on the line yesterday with a new listener.
Okay.
And, he didn't really know that much about us. Came across us just simply by going over the web. And he had some questions about some gold and silver.
Right.
And then we just simply started talking about the market. And he just, what do you think is the best investment out there?
Right.
And I said, well, give me the time frame that you're looking at.
Right.
I said, 5-10 years. I said, real estate.
Right.
He's been in real estate for 30 years. And he was having a tough time.
No, that's right.
He was struggling. He when I laid it out to him a certain way, he said, "Okay, yeah, I get it." I said, "Well, if you're just simply familiar with the adage of buy low and sell high,
right?
How much lower do you think real estate might go in your area?"
Exactly.
And he said, "Well, probably not much lower."
Exactly. And what can you build it for? What And see, what's really neat here, what I like about this trade, folks, is that you can be on almost any side that, all this money's in the system. Is inflation going to be 2 or 3 years? Yeah. Even at 2% a year. Is the house going to go up? Yeah.
Right.
And now, the biggest one, though, is the demographic. 30 years old, folks, or 13 years old is bigger than the baby boomers. And that's what everyone's missing.
Yes.
And in Florida, folks, not everyone, but Florida is a growing place extraordinary, and it's built out. Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses, you stay right there, folks. We're coming right back. We have the Dow up 10, NASDAQ up 5, S&Ps are up 250.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us as you're going to work this morning. Be careful out there, folks. We know we got all you folks in the West Coast, 7:30 in the morning. That's a beautiful thing, right?
Yeah.
No doubt.
Yeah.
So, market-wise, folks, you have had two or three, we've had two burst up and one burst down this morning. So we'll see what this baby can do. But whoever just nailed this from 1404 to 1410, that was a nice little trade.
Yeah.
And what you have here, folks, in the S&Ps, that they just goosed it from 1404 to 1410, and that is big money in the S&P pit. There's no two ways about it. Now, how about the DAX? Is that LinkedIn? What is that?
No, this is actually Lexmark, right? The printer company.
Okay.
The reason why I put it up on my screen here is percentage-wise, they're the second biggest popper out there today.
Okay.
Up 17%. And it's got some volume behind it, but all it's doing is coming into its downdraft, its most recent downdraft out there.
Right.
But that's got 8 million shares. It's got some juice in it today.
Yeah.
It's got 4.5 million shares today. So it'll be interesting to see what this thing does here. But if we take the DAX is just simply having a real inside day here. It's confused, doesn't really know what to do. And if we take a look at it, I mean, a total doji today.
Oh, look at that.
It's trading where it opened. Being the open on this thing was 7,000 was 7,004. It's trading at 7,390 right now, folks. So it has. It's confused. Doesn't know what to do.
Yeah, no, there's no doubt about that. We get no juice. I mean, yesterday at the highs, it was pretty amazing, okay?
Oh, I had to kind of keep clicking my my computer to say, give me the right volume here. It's like 1.8 million shares, something in the diamonds.
Yeah, we did 504 million and the NYSE. So watch this, folks. Normally, well, what's normal anymore, okay? But the bottom line is that when you're at highs like this, you should be pushing 1.2 billion. So the bottom line is that you're at high prices. No one's in the store. They're buying the product, and they're going to get toasted and roasted.
Yeah.
And it's not going to be toasties like you're popping the,
Yeah.
the toasties.
I was reading a study over the weekend, because there's been a lot of reports that have been floating around just simply about just the overall volume in the market being down so dramatically.
Right.
Okay? And, I haven't myself had enough time to do any kind of study on it. Yeah, I can go read the volume.
Yes.
But usually there's something more to it. And this was a study that just simply took a look at volume based on average share value.
Right.
And took a look at it that way.
That's what they always do. Right?
Yeah, and it wasn't as dramatic. You just simply took a look at
as soon as you do averages, it doesn't mean anything.
Yeah.
Because what the reason I'm saying that, folks, is this. When you take average, okay, whether it's 20 days, 30 days, 90 days, okay, it smooths it out and say, okay, the average volume is less.
That's right.
What you want to know is that where's the buying, where's the selling? And if you look at the swing points as to where the volume is, you'll still see, as you go to highs, no one in the store. As you're going downtown, it's monster volume.
Yes,
I mean, it's
that's
double the amount of the volume.
That's right. You get all the information
and
there.
And then all that is saying, okay, is that there's more sellers than there are buyers. And if you've learned anything, okay, and depending whether you've been in your cycle 5 years, 10 years, 20 years, 30 years, you have to understand that Wall Street is about pushing out paper and basically making the most amount of money in the least amount of time. Period. And that's what it's all about. And I guess just looking at the aspect of Facebook, of Zinger.
Yeah, Facebook. Yeah, what's Facebook even trading at today? What's going on inside that stock?
We take a look at Facebook. You get Facebook. She's at $19, down from 45. Right?
Yeah.
Zynga, ZNGA. These are the guys. Zynga's the guys that really cleaned up. They got everything out at the top.
Man, oh man.
They got everything out at 16. So picture this. They only got everything out at 16, folks, but then the broker-dealer community let them do a secondary at 12. They did secondary at 12 and another 200 million.
So they cleaned up, and then they came back and they refueled the company with some cash.
At $12. Exactly. And then it goes from $12 to $3, and of course GRPN, Groupon. Groupon's going to use its own coupons.
Oh, my goodness.
Groupon's at $4 down from 20. So the amount of wealth there that was lost is just absolutely amazing.
Yeah.
All the transfer of wealth. It basically, some of it disappeared. Some of it went from, unfortunately, all those pension funds,
yes, absolutely.
into 4 or 5.
And there's more shares of Facebook coming on the market.
Oh yeah,
right. So actually, what we just went through was one of the smaller.
It was definitely
right?
Yes, it was one of the smaller ones. It was nothing. It was only 245 million.
Yeah,
you got
it's about $1 billion, right?
You got 1 billion shares coming online.
Yeah,
big dollars coming online. No two ways about that.
Absolutely.
So at the end, let's see some of the high volume
bonds.
stocks.
I mean, if you went and just simply looked at bonds. And if there was a correlation between bonds and what's going on in the market or what have you, I mean, today is a total disconnect.
Oh, it is. No, it is. And bonds are in the higher range again now. I mean, bottom line, we're 149.06. Okay, 149.06. That's going all the way back to the 31st of May. You're in the higher range, and it's like, okay, it's going to need more juice to take over the top, but when at 10:30 in the morning Eastern time, and you got 204,000 contracts, you get some action.
Well, and the retracement, when you take a look at the retracement off of the high, going back to July 25th, out at that 153 level.
Yes.
And you come all the way down to the low, and just come down to August 20th when it was down at 145, and you just take a look at the retracement. This thing didn't, it got to the 0.382 and stayed there for a day.
Okay.
It never even. Normally you get that, and that's where you start to see a little bit of a pullback.
Yeah.
It's a normal level, and then it moves on.
Right.
Or maybe even sometimes.
Right.
In the case of the bonds here, throughout this time period, they just simply haven't stopped.
It's showing more strength, yeah, no doubt about it.
Yeah, it really is.
And so the disconnect, folks, is that, okay, the market's still up, you know, even though you're up a little, you're still up, and the dollar's down, you know. And the correlation there has been the dollar likes to move up, bonds are moving up, market's moving down. But I think it's all about Ilka. I think Ilka, you know, basically, you know, found that Brinks truck up in Boston they've been looking for a while. She's buying those euros.
Oh, yeah.
I love it. Listen, folks, as you come over to our website at TFNN, my daily newsletter, Market Insights, well, we're doing a special right now. You can test drive it 2 weeks absolutely free. Until Labor Day, what happens is that you also get a copy of my best-selling book, The Art of Timing the Trade, The Ultimate Trading Mastery System, on the test drive. We'll send it out, you know, postage paid. So you can check that out, and you have until this Tuesday to do it.
Yeah. Well, and then we've got the Nadex.
Yes.
Workshop that September 29th,
September 29th, folks. Okay, Nadex is sponsoring a free workshop. Darryl Mott and myself. It's going to be 4 hours, 8:30 in the morning to noontime. If you happen to be in Florida, you know, go over to our website at TFNN. It's at the Hyatt Tampa, Hyatt Regency in Tampa. And it'll be a great education to really understand. I'm going to be doing setting up the trade, in the trade, and then the risk and money management. So you'll get a huge amount out of it in those 4 hours. And we will be sold out. So Nadex is kind enough to sponsor the whole deal, and we'll get some action. So it's a beautiful place to do it, too, man. There's no doubt about it. So we're coming into, let's see, Friday's going to be a non-day.
Well, non-day, except you've got, you know, Bernanke's going to be saying something that's going to move.
Oh, is that Friday?
Yeah.
Oh.
So it is a non-day because it's the last day of summer.
I like that.
Yeah. So it's actually going to be.
No, that's good then. We're in Arizona, so that means no, we're Wyoming, so that's 3 hours behind.
Yeah.
Oh, so that's good.
I don't know what time his comments come out. But.
Well, they don't even get up to 9 or 10 o'clock in the morning, so that's noontime our time. Oh my God, I'm telling you, man, unreal.
And we're coming into a full moon.
Oh yeah,
on Friday. So actually, it's more bearish if the market pushes up into the full moon.
Okay.
This is just simply the way that these lunar cycles have been working.
The thing that's wild, I mean, okay, so let's talk about this for a second because we've been so sideways. I mean, we've already gone through what, new moons. We've gone through a couple different ones, huh? And we're still sideways, right?
Well, the last one that came in was the new moon, and we're right at about that level here. Okay, right now. But the prior full moon, the market just absolutely took off from there. We had a little retracement coming down into that area, about a 4-day retracement coming down into that area.
Okay.
And then the market just simply took off. So, quite frankly, the bulls, and actually what I had been looking for, was to have the market move down into Friday.
Okay. And then you buy it.
Then go ahead and buy it. Yeah. And then just simply, you know, unleash. Right. So we'll see how this market, that's as I take a look at patterns out there, that's the more bullish case.
Right. No, I can see how that would set
And the market has been turning on these moons. Doesn't matter whether, just simply if the market's moving up, doesn't matter whether it's a new or a full moon.
Right.
They've just simply have acted as magnets.
Right. Yeah, no, which is nice. No,
to reverse direction.
Absolutely. Yeah, no, I can see how that can work, no doubt.
Yeah.
We get Big Blue is flat out here. That's up 12 cents. Ma Bell is down 16 cents. You get Big Mac off 30. Hewlett Packard just still can't do it. It's down. It's only down 8 cents, but the bottom line can't.
Now, is there ABC down on Hewlett Packard, or where's it look like there? Is there a level of support there?
Well, it's HPQ? A long way below where we are right now. And what it was is that you pounded into that B point. Yeah, you blew that B point away with volume. I mean, it's a monster too. It's $22, 17. Well, it's not that bad. $5 gets you $15 on the small one.
Yeah.
That's on the small one. Now, on a larger one, it's like, okay, I get this up on I'll put this on a 15-year right now. And on a 15-year, it's like, okay, well, the floor is down there at 1075. It's like, okay, man. I mean, and look at the volume. Folks, at 1075, which is the low of 2002, you only have 265 million. We're coming down. This month alone, which... this month alone, a few more days left, we've done 500 million shares.
Yeah. You know, it's interesting because candles can really give you a lot of information about what's going on in the minds, psychology-wise, what's going on between bulls and bears. In the case of Hewlett-Packard, it made, as it was moving down into the May 23rd time frame, it made this island reversal candle.
Right.
Which, you know, you see those at lows, you see those at highs. And that's a real strong shift in psychology, change that's out there.
Yes.
And as soon as that area broke, which it did coming back here in June 25th, you know, it just simply told you, because that should have been a really strong support area.
No, I know. You know what's so cool, folks, as Steve is saying, this is really important to understand, because I love the ones that when you have a failure like that, that tells you more than almost anything.
It does.
Yeah.
No, it really does. You know, it shows you
because
where there was
it should have held, folks. That's the bottom line.
In order for that to happen, you know, the bottom, you got to have a strong shift in psychology from selling to buying, okay?
And look at the volume that came in. It didn't take out a swing point, but you had the volume come in, too.
That's right. That's right. Yeah, no, absolutely. No, absolutely. And, you know, and so it works the same at tops. Yeah. You know, I mean, the danger, as I mentioned to you yesterday, you know, is probably the Apple chart. So just take a look and see what Apple is actually doing out here. And it's only because, you know, what chart patterns will do is they'll continue to do similar things on an ongoing basis.
Right.
And right now, you know, what Apple truly has set up, it's, you know, not today. Okay, but the way it's trading here right now, folks, is that if Apple were to gap down below the low today, assuming that it doesn't get down and touch the high from August 24th, which is 669.48, and if it gaps down, Apple will create an island reversal at the 1.272 butterfly, up at its highs. And if you go back and you take a look at other island reversal candles in Apple, you know, that has said, okay, that's it for a while.
I know.
Now, I'm not saying that's going to happen, but you should be aware, you know, whatever stocks you trade, you certainly want to be aware of whatever candle patterns are out there, because in this case here, if it created that island reversal candle, you know, you should not be long.
Oh,
not until at least it takes it back out. You get back in, but at that stage, you should say, okay, I want to take my beach ball and go home until this thing proves otherwise.
There's no doubt. There's no doubt. And, you know, what you have, of course, is that you've had an acceleration up that's extraordinary. Now, what you had yesterday was just amazing. I mean, Apple, folks, was up 1270, but yet the NDX was only up 3 points, and the NASDAQ, I forget, was up maybe 3 points. That in itself, folks, is just showing that the underlying aspect of all the other equities, there's zero there.
Yeah.
You know, and so what does happen, you know what's interesting? Even at the end of this month, what happens, and I've seen this way too many times, that folks that have been in the market for a long time, they're going to get their statements, and they're going to try to figure out, why aren't I up?
Sure.
Okay?
Sure.
And because they're looking at the S&P at 1410. They're saying, I don't understand this. How is my statement not up? It's not up, folks, because you know, if you own Apple, the statement's going to be up big time, okay? Depending on what the weighting structure is in it. But what it is, the underlying aspect of many of the equities versus the indices, okay, are down, and they're down in a good way, not in a small way.
Yeah. No. And you've got two sectors of the S&P, you know, that still haven't really moved. You got the financials, and you've got the energy sector. You know, both of those have got some really nice sell patterns in there.
Wow.
Yeah.
Steve Rhodes, Tom O'Brien, appreciate you growling and prowling out here with us, folks. You stay right there. And, of course, on Tuesday, we're going to be going from here to New Mexico, Kate Stalter, with the small cap roundup.
Going to Phoenix to Kate.
Phoenix.
Not Phoenix.
What I said?
New Mexico. You said Newton. You said Newton.
Newton? How the heck I get Newton?
Yeah, we're going to New Mexico.
You stay right there, folks. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We have the Dow right now up 16, Nasdaq's up 5, S&Ps are up 2.5. Let's go to John in Concord, Mass. Hey, John, what's going on?
Hey, Tom.
How you
Concord,
been?
New Hampshire. Concord, New Hampshire.
Concord, New Hampshire. Oh, I'm sorry, man. Concord, New Hampshire. That's
free,
beautiful.
Live free or die.
That's right. I like that.
You know, I'm not a trader from the point of view. You guys have taught me a lot about discipline, and I see companies that are attractive to me.
Yes.
And yet, relative to the conversation you guys were just having, I look at this fiscal deal that's going to happen. I look at Europe, and I say to myself, even if my view wants to be 6 months a year and not a trade,
right?
How do I buy a stock given this overhang? And I just find that I can't do anything, and I'm interested in whether you'd say, no, that's not what you should be doing.
No, I think that's smart.
I have a hard time.
You know, I think that's smart. Listen. You know what does happen, no doubt. Okay, is that because of my history, meaning, you know, I'm a short-term trader. That is only one part of my history, though. It was kind of interesting because, see, when I did the bonds, I did the bonds for 8 years. We did gold for 8 or 9 years. You know, what you have to do is exactly what you're talking about, is that in a longer-term basis, there's much more money. There's no two ways about it, okay? What you're saying, and this is where I think it's absolutely crucial, is that when you're going in for a longer term, you have to go in when you feel it's right. You know, because there's a lot of different head games, but, you know, and if you don't think it's right, which I agree with you, I don't think it's right either, because exactly what you're talking about, then you just wait till you think that your risk has gone down and your reward may go up.
And I think I don't know if John is still there, but I think the next...
Yeah, no, I'm listening.
Okay.
Thank you.
Yeah, no problem. You know, I think the next bull run, okay, the next bull leg, it'll show itself. You know, it's
right.
won't disguise itself, and at that stage, you know, that's when you come back in.
I appreciate your, let's say, you're passing on a little bit of confidence to me. Thank you very much.
Okay,
absolutely.
Man. Have a great one. Have a safe one.
Yeah. Bye.
Now, you know what's really cool about that, too? And this is something you want to wrap your head around, folks. Just having cash is wealth.
Oh,
okay?
yeah.
You know, so, you know, even though, I mean, we're in the markets every day, okay? And there's always something going on. But the reality that, you know, you got to do what you have to do. But, and this would be my take, okay? Because I think the dollar is getting stronger. And when I look at the aspect, even the last few years, if you went for the mantra that the Europe was going to take over or China was going to take over, well, it's not happened. And it's not going to happen, folks, okay? The USA is the name of the game, okay? So it's like, you know, if you just hold your cash, you're going to be able to buy more, you know? And so, and any type of investing, you absolutely have to have confidence that you are doing the right thing. And if you do, then, you know... I've just seen that the deals come out much better. They just do. It doesn't mean you wouldn't make money all the time either, but the difference is that if you're not, you won't kid yourself and you'll move out of it and get into something else, you know.
Yeah. Yeah, you know, and there's you got to take a look at the different types of investment opportunities that you've got out there.
No doubt.
You know, it's you know, we see bonds moving up here.
Right.
But when you take a look at interest rates, you take a look at bonds. You know, that game is going to be over at some point in time.
Right. No doubt.
You know, and there'll be big money in being on the other side of that trade.
Huge.
Right? So,
Huge.
you know, so when you take a look at markets, you know, that come to an end,
right?
You know, that's when you have the opportunity to make, you know, largest amounts of money. So there are different markets out there. You know, I think the yen has the potential to be one of those trades as well. The Japanese market has the potential to be one of those trades.
I agree.
As well.
And the Nikkei.
Yes, that's right.
The Nikkei. Yep. Well, actually, as I said, John, hey, look at the Nikkei. The bottom line, on a longer-term basis, I'd look at the Nikkei.
That's right.
You can scale into that, baby.
That's right.
Steve Rhodes, Tom O'Brien, you stay right there, folks. Kate's coming up with you. Victor Jones, Darryl, David White, Ken Shreve, and I'll be back.
Have a great day, folks.